Hello, YouTube. We are flagging out into the most important data point coming out tomorrow, or CPI. So we consider this to be the Super Bowl of data. And as we saw with the Chiefs and the Eagles yesterday, it can happen fast, it can happen dirty, and there can be sudden reversals. So what do we do when we form lower lows and lower highs, but we are resting over what used to be resistance, or roughly 410.64? Let's now bring back our lines and see exactly what happened and get the show kicked off. So if we zoom out a little bit, the reason why this is important is because we're taking out relative lows. And after we take out the next relative low, going back to February here at 410.64, that is when we can battle for 420. That is right, 420. And there are some really big option clues. So stay tuned and we'll go through that in a moment here. So as we mentioned on the weekend, we're going to be looking at headline CPI going into tomorrow. And we also know that we have month over month CPI expected to come in hot. Let's see what happens. As of right now, there's definitely a lot of positioning, and we're going to talk about that right now. Why? Well, yesterday, meaning Friday, we were at 69 for greed. Now we're at 72, which means that we actually back tested the August high here at about 69, and we bounced off of it. So we talked about that before with performance chasers. Encourage you to watch the weekend video if you want to get caught up on that. So here, what we're looking at is going to be option flow from our platform, thealgo.com. Link in the description if you want to join us. At the last 30 days, we sorted by premium. We see, there's some pretty big orders, tens of millions of dollars here. But let's look at the overview to better understand what's happening, because a 1.18 put call ratio means that there's not really much of an edge. Looking to SPX, 9 billion. Side note here, just that we're looking at orders that are still not expired and that are over $100,000, which means this is not couch money. This is 100 grand or more that is still not expired, but purchased in the last 30 days. So with OPEX coming in on Friday, what is positioning? Well, 9 billion SPX short, 7 billion long, SPY actually bullish, 5.3 billion long, 2 billion short. Interesting. QQQ pretty close to break even, 700 versus a billion. Then we look here to Tesla. Wow, down to 1.9. That's right. It's almost 1-for-1. Amazon, 360 million long, 500 million short. So it's looking like a lot more even, and that put call ratio is here at 1.18. We will also circle back and look at something else in a few more minutes. So it looks like the bear fuel works, and people are happy to chase performance. So that's the reason why we remain at the top of this area. Why? Greed is still very high. And looking here to our community poll, thank you to everyone who votes in it. Next week, the stock market will be, well, a lot of people are actually voting down, and that was including me on my personal account. There we go. That's what I thought would happen this week. So 2 out of 3 people think we're going to go down. Is retail going to pay as they normally do? Is tomorrow or Valentine's Day going to lead to red on the board, or is it going to be a sweet, sweet Valentine and we go higher? Here is something else that happened over the weekend that I paid particular attention to. U.S.-China diplomats' Way first meeting after balloon drama. There's now been 3 other objects down in the last 3 days. I'm going to jump forward here to the reason why I think this might be constructive. Blinken and Wang would meet at the Munich Security Council, or Security Conference, which runs Feb 17 to Feb 19. There you go. That's in about a week. Last thing to look at here going into CPI is going to be that both core and headline growth expected to decline year over year. So everyone's going to have a way to interpret this data. Encourage you to pause the slide or rewind if you want to get all the context. After we get through CPI tomorrow, we've got core retail sales, and we also have PPI and PMI coming out on Thursday. So what are those? Those are called leading indicators. If all that stuff confuses you, again, click the link in the description to watch the weekend video. All right, now let's get to the fun part, or some charting. So going back to the S&P here, for us to get back up to that 420, all it will take is for us to complete this W here. So we already have like a really good chunk of it. The question now for me is whether or not we're going to reclaim these uptrends, or this angle of ascent, or this bullishness. So what have we had? Here's where things get a little interesting. Pop, flag, pop, sag. So we're not really pop flagging anymore. We're sagging. Why? Lower highs, lower lows, but we're right here at the high of the day. So on a daily close, we're building up pressure going into tomorrow. We reviewed all of those big charts going into the weekend, but I want to leave you with one tip here. Why? Look at the number we closed at. It's roughly 413. We looked at the option flow so far for those unusual options. Pay attention to this number. Why? I'll tell you why. You guys said you wanted more option analysis. Here you go. Let's do it. It's OPEX week. Let's look at some options here. Here we're looking at SPY, which is the, again, Spider Managed ETF expiring on Friday on the 17th, which is the monthly expiry. We're looking at the 16s. And also, I'm paying attention to this 413 area. Why? I'm noting the premium attached to these contracts at about $5, 450. Also looking here on the right-hand side, it's about 450. What does that mean? It's going to take about a 1% move lower or a 1% move higher for these in the monies to pay out. Why does this matter? Tell me, Justin. All right, let's pull up our calculator and let's do a little bit of math. Why? It's important for us to understand what's going on here. So now we're going to go cancel. We're going to go, oops. Let's close that out. Don't save. Let's go to our calculator. 413 minus 4.5 is equal to 408.50, or what? Flat on the week. And that monthly area we were just talking about. However, if we go 413 plus 4.5, oh my goodness, we're at 4175, or basically 418, which would be what? The birth of a new bull market on a weekly close into OPEX. Can the bulls do it? Well, let's look at a few more indicators here just to see the quality of this move. Because if CPI is going to be a buy tomorrow, we talked about it on the weekend, it should be up, up, up. We also have roughly a 2% cushion now on SPY for us to fall down to our weekly low. We got about a 1.8% cushion and about a 3% cushion to our 50 moving average. That's looking pretty good. Looking here to QQQ, we talked about that same thing. Getting back above 305.12, which we're pretty close to, we birthed that new bull market, which means the turning point might be for us to go back up to resistance or about 35 points higher. If S&P is going to close at 417, 418 this week, QQQ is almost surely to close in this area. It led today too. One thing I would note, I forgot to talk about on SPY, is just that volume is dropping off. We look here to our daily chart, volume is dropping off, which kind of tells me that positioning is already done. Yeah, I think people are already largely positioned. Moving forward, let's look at a few more charts here, looking at the dollar. Dollar actually rejected off that area we were looking at on the weekend, rejecting off our uptrend, which goes back to 2021. And it's also battling for its 50 DMA here. So let's look at that one-day chart and see if there's any other data, because this is really important for us. We bounced off support. We broke our falling channel, which are these red lines. And now we're battling or trying to digest our 50-day moving average. I would expect a violent move off the 50 if that CPI print is going to tell us that the Fed's going to get more hawkish and we're going to go down, down, down. Looking here to the VIX, pretty similar story. We gapped over the 50 DMA and now we are digesting it. I would expect liftoff off of that 50 at about 20.7 right now if we're really going to get a shock tomorrow. All right, moving forward, there's two more things for us to look at. We're going to look at the bond market now. And I'm actually going to focus on the weekly chart here because I think it's really important to understand, like, what are we doing here? So we can understand that we did a cup with a handle, then we just boomed higher. We're trying to reclaim our uptrend. We've had a powerful move so far this year. From 4% up to 4.5 or all this resistance here, we've been having a really tough time on the zone right here. That's a 10+% rally year to date. Look at last week's candle. Remember, when stocks go down, it usually means bonds go up. So the bond market is listening loud and clear to the CPI print tomorrow. As of right now, the stock market is shrugging it off. It looks quite similar to when we look at, and just note that every time we dip down, there were all these lower wicks. It just got bought up hard. But now that we're hitting roughly 4.5, I'm not sure if we can leg up and form like a cup with a handle, or if we're going to fizzle out and this is going to turn into resistance where we go back down. That'd be the other piece I'm looking for. And then finally, I'd be looking for the 10-year note to also advance to go green on the week. Fairly similar action here. We know all the lower wicks led to buys, but we're forming progressively lower highs, high, lower high, lower high. So we're going to have to form a higher high and basically get back above 4% on the 10-year note for us to have a meaningful move higher. If you enjoyed today's video, I would really appreciate if you could smash a thumbs up, subscribe to the channel, and if not, there is the weekend video in the top comment and the description. Look forward to seeing you tomorrow. Thanks so much.